we're seeing not only lots of tax debt, but increased amounts. The average tax debt that people used to have is almost doubled now compared to what it used to be. And there's a whole heap of solutions. I like to look at the solutions if possible, rather than just the problem, as I know you do too. And there are ways we can do it by looking at the interest and penalties, and they are so huge at the moment that often they make up half of the debt. And there are ways, obviously, that you can reduce or get rid of the debt. But I think the key is there are consequences to all of this. So for me specifically, it's very much horses for courses. It's having a look at the client, what the client's going through at that particular time, how many debts there are, whether it's just ATO debt or, as you would see all the time, whether they owe money here, there and everywhere, and then working out which is going to be the best course of action. And then, of course, there's times where you and I have worked together a lot, whereas a company might need to go into liquidation and we're able to help the director.
There is always a cost. Now, what that cost is going to depend on each person's individual circumstances. And sometimes that there is a cost for the company and a cost for the director. So if we talk about the corporate one, when you go into so just say it goes into liquidation, and then we have the ability to, as liquidators, to then pursue potentially insolvent trading claims and things like that. Obviously, there's a cost for the director, but in some instances, they may not have lodged an SGC statement. They may not have lodged their BASs within 3 months of their due date, and therefore they're still exposed to a director penalty notice being issued at a later stage, because they're already, as you know, they're already automatically personally liable for that tax debt because it was lodged outside of the time frame specified in the Act. So therefore, they're going to have this personal consequences. So the liquidation is going to get rid of maybe a larger portion, maybe a smaller portion of the debt that's associated with that. And obviously that comes at a cost. And then there's going to be the personal cost associated with the non-lodgement component, the director penalty notice component, which they will then need to deal with personally. Now, their personal position is probably going to be very different. They may or may not have assets. They may not want to go bankrupt. Again, if you're going to be looking after a number of companies or being a registered builder or want to do these things short term, bankruptcy is probably not something that you're going to want to explore very quickly. It's something you're going to want to avoid. And that's where you need to then go into negotiations, whether it be the tax office or other creditors.
And often we see, especially if the company has gone through an act of insolvency, whether it's a voluntary administration or however that might work, the director's debt isn't as much as the company's debt. What the portion that the director is personally liable for is lower. So that's where we're able to come in and get them time and a payment arrangement over time that meets their current cash flow. And if there are interest and penalties still sitting around and still sitting there, then we're able to look at getting rid of those as well.